Good morning to everybody who's listening to this webinar online and to those of you who are presenting today. I hope you've all enjoyed a good week. Welcome to this session, which has been given the title Striking a Balance Between De-risking and Managing Risk in the Financial Services Industry. I'm David Ecott, the Head of Banking Supervision here at the MFSA. I took up my position in February of this year. I'm very grateful to my colleague Emily Benson for inviting me to make some introductory remarks to you today. Before I do that, let me just deal with a few points of admin. There is the facility to submit some questions for a Q&A, which will take place at the end of this session. You can submit your questions through your viewing screen. We will select a few of those for the Q&A. Don't worry if your question is not selected. We will put all of the questions together with our answers in a written document and circulate it to participants as soon as we can. Some of you may be needing a certificate of attendance for this webinar. If you are, could you please make sure that you are logged in with your name and surname visible to us? It's unfortunate, but we cannot accredit people with anonymous addresses. Today's session is due to last through the morning, so there is a coffee break halfway through. Okay. Developing a sustainable strategy for your financial firm in a competitive financial services market, such as the one that we have within the EU, is a challenge in normal times. But these are not normal times. Boards and executive management teams also face the significant obstacles of economic uncertainty, and in Malta, a significant focus from the regulatory authorities on the standards of compliance, particularly with international and EU requirements for the prevention of money laundering or the financing of terrorism. It is therefore right that part of how we expect firms to demonstrate to us that they are doing what is required is by assessing their compliance culture. There are a number of facets of a good compliance culture, and my unit and Emily's unit cooperate within the MFSA and in turn with our colleagues at the FIAU in our assessment of them. I am of course referring to the assessment we make of the tone from the top through our interviews with boards of directors and senior managers, our evaluation of the 3 lines of defence model that firms are required to have commensurate with their risk profile, and the extent we can rely on that to deliver good prudential and conduct outcomes. The quality of policies and procedures adopted by firms to support the implementation of the board's expectations, and the operation of that control structure. We also look at the results delivered by our on-site reviews conducted by FIAU and MFSA officials. Within all of this, of course, what's important to us is how firms have established understanding on the ground within their staff of the purposes as well as the requirements of the rules and regulations in this area. Now, we know that there are challenges that firms face to delivering these outcomes. They include developing a good understanding of the requirements and expectations of the regulator. So I hope today's presentations and discussion will help with that. But the challenges go beyond that, to include retaining quality staff and investing in appropriate systems to mitigate the risks of poor consumer outcomes, being used for the purposes of financial crime, exposing the firm to legal risks, as well as the risk of not meeting prudential requirements. Financial services firms are complex businesses providing valuable services to customers who entrust them with their money. So it is understandable that compliance expectations are set commensurate with that. From the work that we've done in the banking unit so far, reviewing ICAPs in banks or the business plans of financial institutions, it is clear to me that boards and senior management teams are underestimating the cost of compliance with these standards. We work collaboratively within the MFSA across different business units and with our colleagues in the FIAU to form a judgment on each firm, understanding your business plans, the challenges that face, but equally objectively assessing your compliance culture and standard. So there are some important messages in today's webinar which provide guidance to the industry on how to meet those regulatory expectations, and I look forward to the presentations and the debate. I'm going to hand over to Emily Benson, the Head of Conduct, who's going to talk in more detail about the MFSA's compliance expectations. Thank you.
Good morning. I'm Emily Benson, the Head of Conduct. First of all, I'd just like to let you all know that this session is being recorded, and that therefore if you do want to review the session or if or refer it to your colleagues, then it will be available online for you. I'm here today to talk about raising the bar for compliance in Malta. The MFSA has a responsibility to ensure high standards of conduct and management throughout the financial system. Malta is at a crossroads, a critical juncture, and if this is so is Malta's financial services industry. But if the financial services industry is at a critical juncture, it is the MFSA's mission to do what it can to guide it down the right track. One thing is clear, and that is that things cannot stay as they are. The risk of Malta being put on the FATF grey list is not the only reason, but that alone would have numerous adverse consequences, higher costs of borrowing and less inward investment. If MONEYVAL has been keeping the authorities awake at night, then this will only get worse if we have to, with the increased effort to overcome a grey listing. But there are other reasons. Malta wants to continue to be an active member in Europe and to have respect on that stage and internationally. Among the many reasons that I aspire to call this country home one day, and I'm a relative newcomer, I came in March, is the Maltese. They are forward-looking, educated, hard-working, early adopters. The company faces great opportunities and benefits, and it will be frustrating if something that can be changed gets in the way. The Maltese virtues I just mentioned, in my view, make the country one that is keen to develop, and compliance is one area where there is an opportunity to grow. It is a truism that you can't change others, but you can change yourself. Ultimately, only you, the firms, can make a real difference here. And the MFSA, in thinking about its strategy, has recognised that. Firms, and ultimately their senior management, are responsible for their compliance culture, and the MFSA is going to reflect this in its relationship with those that it regulates going forward. We expect firms to work towards a good culture by giving some thought to what that would look like, and then taking steps to put that into practice. Where there are failings and shortcomings, we expect firms to identify these. We expect firms to inform us about these failings, where they've identified them themselves, with proposals for the solution. To be clear, this applies to all significant control failings, whether or not they result in a risk to the customers. Too often, we find the issues in the inspections, and the firm has not identified them, or worse, knows about them and has done nothing to fix them. This does not give us confidence that there is a strong compliance culture. Where we are not feeling confident, we will step in one way or another. We are not here to give you free regulatory health checks. This is something you should want to get for yourselves. As David said, compliance comes at a cost, which I prefer to think of as an investment. Nor will we design your remediation plan. You need to identify whether you have the expertise, and if you don't, you need to source it yourselves. That is what taking responsibility for your own compliance means. That is why David thinks that the investment in compliance will need to increase. And if management are not taking steps to measure how compliant the firm is all the time, they're not meeting our standards. And where this is persistent, we will hold management accountable for that. Too often, records, reports, systems are being hastily gathered together on the eve or even during the inspection. This does not give us confidence that the firm is taking compliance seriously. We have to wonder what would have happened if we hadn't turned up. The signs of a weak compliance culture are easy to spot and difficult to hide, if you know where to look. I've compiled a little selection for you on these slides, which also will be available after. The 3 lines of defence that David mentioned: separations of functions, challenge, accountability. These are the hallmarks of a good culture, so a structure that shows no understanding of these principles is a dead giveaway. And we expect senior management to understand this and take ownership of the steps to put these things right. Competence and taking the job seriously are other signs. Too often, a compliance officer is a token role with no real expectation of the time commitment or the resources required to ensure that compliance risks are properly identified, monitored, and mitigated. In due course, this is another area where we will hold management accountable. It is impossible to run a compliant firm without good record keeping. I know that I've said this several times, and I shall say it again. If the record keeping has gone wrong, our officers really don't need to look any further. It's an absolute telltale sign that there's a problem. Not only can you not run your relationships with your clients properly, but if you have found something wrong and you've tried to fix it, if you haven't recorded that, then you won't have a defence. So far as we're concerned, if it isn't written down, it hasn't been done. And not paying attention to regulatory change. Everywhere, the law changes constantly. Every business cannot ignore that fact, and the financial services industry is no exception. Too often, again, we find that things that have been in the law for a long time haven't been properly implemented. Late implementation belies the firm's attitude and its commitment to being compliant. We expect firms to implement things in a timely fashion as they come down the track, not after the event when we come for an inspection. We are on a journey with you, and we are sharing our direction of travel, but we are moving up a gear on this, both in the compliance space and with regard to MLROs. We are imposing greater scrutiny on firms and greater scrutiny on their officers. We will be publishing consultations on this to ensure that we propose practical and proportionate but effective measures. But given where we currently are, we expect that the bar will appear high at first. We believe that that will be overcome in due course. We have faith and confidence in you as an industry, but we will be following up on this. We already include scrutiny of compliance in our inspections, but there will be more targeted actions. We expect those who see their future in this industry and their future in compliance to supplement their experience with qualifications. And this will increase their value to their firms, and it will bring benefits to the firms. I repeat, it's an investment. And we make recommendations along these lines where we find the skills and the knowledge are not there. We will also interview candidates who come forward for roles, and if we're not satisfied that they meet the required standard, we will not approve them, or we may approve them with conditions aligned with what we see as their skill gaps and their knowledge. In the longer term, we may impose qualification requirements. This is something that's under consideration because the complexities and expectations of the compliance function have moved stratospherically in the last few years. And this is an area where expertise is required. Professionalism is the order of the day. But as a first step, firms need to think about how the compliance function works in their business and how they want it to work going forward and how they intend to implement it. The rewards are there for the industry and Malta, but there will be an investment to be made. Thank you very much for your attention. I'm now going to hand over to Clara and Shantaine from the FIAU, who are going to talk to you about FIAU initiatives.
Good morning and thank you for joining us. Thank you to the MFSA for inviting us here once again. My name is Clara Borg-Bonacci. I manage the FIAU's guidance and outreach team. So we're a small team focused on issuing guidance documents, organizing training, and other outreach initiatives in general. So to help the FIAU, but also the MFSA and subject persons to enhance the overall level of compliance with anti-money laundering standards in Malta. Now, we kicked off February with two massive new powers for the FIAU. So, of course, only a global pandemic could shadow that. The first one is on the new regime, which seeks to restrict the use of cash. So the FIAU was selected as the entity to supervise the implementation and enforcement of future policies on cash restrictions. And that's something that our legal team is actively working on. But the second one, and that's why I'm here today, is the power to administer a central bank account registry for Malta. So what we call CBAR, to spare us all some extra syllables. I understand that the majority of the listeners here today are from banks and financial institutions. You've been working with us closely on CBAR, so you're very much aware of what it involves and what you need to do to be able to comply and help us set CBAR up. So I'll still give a brief overview, but then I'll focus on the state of play, challenges, hopes, and future aspirations on this. So what is CBAR and why does it matter? So the proper definition of CBAR is that chunk of text that you have on the left, which is an automated mechanism allowing for the identification in a timely manner of natural or legal persons holding or controlling bank accounts or payment accounts. And you can continue to read the rest, but I would rather just break it down into what it really is, because put simply, it is a database or a repository which holds identification details, basic identification details of all those legal or natural persons, so be it human beings like us, or companies or foundations, and of their beneficial owners in that case, who hold, so own, or else control, so in the case of signatories, a payment account that is associated with an IBAN number. So not just any account, but a payment account that is attached to an IBAN number, or else who otherwise hold safety deposit boxes with local banks. It also holds some other data, namely the length of the duration of the relationship. But why are we implementing CBAR? So first and foremost, it is a requirement. So it's one of our obligations as an EU member state. The fifth anti-money laundering directive introduced this requirement, which made it mandatory for all EU member states to establish centralized automated mechanisms. So every country in the EU will have to have this functioning database. And the primary purpose, so it's not just a question of fulfilling our obligations, but it has a very fundamental function. It's to ensure that in our fight against money laundering and funding of terrorism, competent authorities such as FIUs and law enforcement authorities have timely access to essential information. So be it for asset tracing purposes, an FIU analysis, or a police investigation, having direct access to certain information will significantly increase our operational efficiency. Now, I'm here from the FIAU, so I'm going to speak about how this is going to help the FIAU specifically. So CBAR will definitely help our intelligence team, intelligence analysis team immensely. And to give you more context, I'm just going to explain the current process for retrieving information, which I've illustrated through the popular emoji format. So when our analyst, the detective in the middle, is working on a case after either having received an STR, say from a bank, or having received intelligence from our counterpart FIUs across the world, or as perhaps from information that we have on file from other sources, the analyst will examine different sources of information to build a case on the persons mentioned in the STR and other connections, relationships, and transactional patterns. So among that information, naturally, that person's financial activity is very important to us. So the analyst will typically, though not in all cases, send a request to all banks in Malta, asking them if they know the individual concerned, or if they don't know the individual concerned, and if they do, to provide us with all information they have on file about that person, including their transactional activity. So you all know what the request looks like. It's a standard template, and I'm sure you've received one or two a day of these. And then there are 5 days to respond, which is sometimes shortened if the case is very urgent. Now, on the right-hand side, you can see the arrows pointing to the right, which represent our outgoing requests to banks. Please bear in mind that this is just an illustration to illustrate the process, and we don't only request information from banks, we request from all subject persons, but today we're going to look at banks. So now, until we receive responses, we have to continue our analysis on other sources, but regardless of whether the answer from the bank is a yes or a nil reply, we definitely need that information to be able to move on and look at other sources of information. Now, as you can see from the green arrows pointing back inwards, most of the banks will thankfully reply in time. But sometimes we need to send reminders because they haven't replied in time. We are under no obligation to send reminders. We do not have to send reminders, but we send reminders because we really need that information to continue our analysis. And sometimes, unfortunately, we just don't receive anything for a long period of time. So we just don't hear from that particular bank or financial institution or other subject person in question. There's also another issue that perhaps we don't speak about a lot, is that with every request for information that we make, there is a small chance of tipping off. While the chance is small, the risk is quite significant if that had to happen. So if a case is very sensitive, perhaps because we're working on a very well-known or very high-profile individual or company, the FIAU may have to perhaps either refrain from that request or limit that request, or else follow specific leads to avoid attracting unnecessary attention. But with CBAR, the FIAU will be able to access a database to understand whether that person that it's searching on holds payment accounts with any of the local banks. Now, the database isn't going to contain financial information, such as transactional activity or documentation, but having narrowed down its search, the FIAU can then go directly to that bank or FI to ask for that information. And there are some limitations to this, though, but I'll speak about it later. So where does the CBAR data come from? So the FIAU narrowed it down, narrowed the reporting entities down to those credit and financial institutions that offer payment accounts identifiable by IBAN. So not every type of payment account, not every product offered by banks. So for instance, fixed term deposits might not be associated with an IBAN account, so we're not requesting this for the time being. And the intention was to ensure that we can have CBAR set up and running in a timely manner, as strong and as solid as it can be, and then potentially, if we see that it's working well, extend it to include information on other products. So the reporting entities will be obliged to keep an electronic record of the data that they're prescribed to upload to CBAR, and the data would be uploaded to CBAR on a weekly basis. So the entirety of the data is uploaded afresh on a weekly basis to make sure that it's up to date. And in the next slide, you can see that the data that we request is limited in nature, in the sense that we're not collecting documentation, we're not collecting any transactional activity, and even in terms of identification, it's as limited as possible. We're not collecting residential addresses, for instance, but we're keeping that data which is necessary and proportionate to allow us to have a functioning database which is searchable and functional. So, who has access to CBAR? This is a very important question, and of course you have every right to be aware. Besides, it's also in the regulations and in the directive. The information on CBAR is definitely not publicly available, and it's limited to a set of authorities, but moreover, the requests are made on a case-by-case basis. So every search will be attached and will be coded through a search ID of an internal case that's being assessed by that particular authorities. The authorities that can access the data are those listed on the right. I'll just read them out. So it's us, the FIAU, but purely in our analytical function, law enforcement authorities, the Asset Recovery Bureau, the Commissioner for Revenue, the Sanctions Monitoring Board, and the Malta Security Services. Now, still, data can only be accessed for very specific purposes. So that access has to be necessary for the prevention, detection, investigation, and prosecution of money laundering and the associated predicate offences, terrorism financing, and serious crimes. So I won't go into a lot of detail on this, but there are a lot of measures in place to ensure that data is only accessed for these very limited purposes. And this is done by design. I'm not going to mention everything, but it starts from limiting the actual number of people who would have access and them having unique identifiers, to regular review of search audit logs to ensure that the searches made are relevant to the case. So when somebody is searching, they would have to input the internal number of the case that they are searching on, and then the search logs can be audited. And the search functionality itself is designed to limit the results to what is necessary, among a number of other features. So that was a very terse overview of CBAR and its functions. There is a lot more granular detail to it, but I hope that you have now understood more clearly what CBAR is, who would be reporting to CBAR, how we relate to banks and FIs, and why we need it and how it will help us. So let's look at where we are now and the progress that we made and perhaps some challenges ahead. Now, some sobering news is that the fifth anti-money laundering deadline for setting up CBAR was the 10th of September of this year. We aren't live yet, but let's start by taking a look at where we came from. So around this time last year, less than a decision was taken to assign the CBAR function to the FIAU, and we got the ball rolling immediately. So in these 12 months, we consulted with other countries on these systems, so countries that already had such systems, to see how it worked out and best practices. We complemented this with a lot of research, so legal research. We developed our requirements. We held early information sessions and kickoff meetings with banks and FIs to get feedback from them on the type of information they would be able to report. We underwent a procurement process, or a public procurement process for the IT system, and we closed that, and the suppliers developed the software. We also drafted the regulations for CBAR, and in the meantime, we carried out a lot of outreach and information sessions to get subject persons on board as quickly, as rapidly as possible. Now, bear in mind that some countries already had such databases in place, so for them, once the requirement kicked in, it was a question of extending access to certain authorities, such as the FIAU. But from our case, we built it from scratch. Before I speak about where we are now, I'm just going to mention the outreach initiatives that we undertook. And this is really important because it shows the cooperation among the reporting entities and the FIAU, but it was essential to make sure that this database, that the CBAR, is as functionable as possible. So the outreach initiatives consisted of kickoff sessions with banks and FIs. We issued draft implementing procedures on CBAR for consultation. We issued an FAQs document answering a lot of the very valuable questions that we were receiving, both from a technical but also legal and anti-money laundering point of view. We also held a technical workshop on the XML schema and data validation. We organized a webinar to guide on the reporting portal itself and the associated API. And to make everybody's lives easier, we also set up a dedicated email inbox for queries, and it's cbartechnical@fiumalta.org, and I'll repeat it later. We still receive frequent phone queries, and we welcome that, and because it means that there is a lot of ongoing interaction with MLROs and IT personnel from banks, but also with our IT personnel. So I'll just take us back to explain where this leads us now. So where are we right now? Why isn't CBAR live yet? So the regulations that will bring CBAR into force are currently undergoing the parliamentary process. So these have been submitted to Cabinet for any discussions, and until the regulations come into force, we cannot go live. But this is not a bad thing. So we are using this time to continue working with the reporting entities, and from what I hear, the testing period that is still and currently underway is proving to be very valuable, very productive, and with very fruitful results. And reporting entities, so currently, to put you in the picture, are uploading anonymized data as part of the testing, and it's excellent because it's giving both us and the entities the opportunity to identify issues which one wouldn't have anticipated, and we're developing some workarounds together. So just to give you an example of the challenges that we faced and we resolved through the testing process. So one of the mandatory fields that banks would have to upload was the place of birth of the individual. But there's also an exception in the case of low risk situations, so where you are applying simplified due diligence, where you need not obtain information on place of birth. So rightly so, some banks would have customers on whom they do not have information on the place of birth. And that would be in compliance if they're doing this because of the low risk identified. But instead of removing the requirement on CBAR to upload information on the place of birth, we simply added a code where rather than selecting from a country, you just select no information available. So this helped us to retain the data quality and the search quality in cases where the requested information happens to be available. So while I was preparing for this session, I asked our CBAR team for some feedback and for some tips on how banks and FIs can continue to cooperate with us and to help us to make this as successful as possible. Firstly, I just want to say that they have noticed and remarked on some very positive interactions from reporting entities, especially from banks, both from their compliance and IT functions. So thank you. We really encourage this. It augurs well for us all, and it means that we can have a very robust system. As for tips, they mentioned the focus on the quality of data, so small details, small errors such as names and surnames being switched around in the database or incorrect spelling of names. Another tip is that if issues do crop up, even past the testing period, please do speak to the FIAU. We'll resolve them or we'll develop workarounds together. Please do not develop your own workarounds. This would be problematic. And also bear in mind that an issue you are facing is potentially an issue other banks would be facing. And finally, unfortunately, we anticipate that some entities just might not upload any data, either because they haven't maintained it properly or they haven't collected it at all. Please avoid this is bad. Emily Benson earlier mentioned that if it hasn't been written down, it hasn't been done. We fully concur, not just for compliance purposes, but stellar record keeping will take us a long way to having an efficient database. So I'm just going to close my presentation. Actually, before I do that, I want to let you know that once the regulations come into force, it's still the FIAU's prerogative to determine when to go live. So do not start uploading live data until you receive official notice from the FIAU. And this is done through the newsletter and through an upload on our website. So as I promised, I'm going to close my presentation with I just need my last slide. In the meantime, I won't keep you curious for any longer, but the burning question is, does CBAR spell an end to requests for information? And the answer is no, but I'll make it a bit more palatable until my slide loads up. So in the short term, you're not going to notice a significant decrease in requests. And this is for a number of reasons, namely that the data is still being populated. So naturally, there isn't going to be the full scope of the data. There are other issues. So for instance, accounts that have been closed in the last 5 years and prior to the submission starting date aren't going to be included in CBAR. There we are. But this will become less of an issue through the passage of time. And finally, as we mentioned earlier, non-IBAN accounts and other banking products are not yet in scope of CBAR. So we would naturally still be complementing our searches with requests on other data. But what about the long term? Once again, we're not going to be eliminating requests for information, but you will note a significant decrease. Why? Because as the database becomes more populated, we're going to have more visibility on the answers that we need. The scope of the reportable data may potentially be extended. So this is something that, that is envisaged possibly. And the reason that it's not going to be eliminated completely is because, as you know, CBAR itself will not contain financial data, but it would allow us to significantly narrow down our search and only make those requests where we need the actual financial data. So we'll make those requests to those banks or FIs that, that show up as a hit on that person's identification details. But it will also make both your work and our work much more efficient. Like I said, the testing period isn't going to last forever, but nevertheless, if you have any issues from now until as long as CBAR is in operation, do get in touch with us, either through the phone or through meetings, or you can get in touch by email. So if it's a general query, you can get in touch through the contact form on our website, and it will go straight to the person concerned, or else you can email on cbartechnical@fiaumalta.org. So that brings me to the end of my presentation. Thank you very much for your time. Thank you for the cooperation that you've been showing to get CBAR up and running. And I'll now pass you over to my colleague Shantian, who is a manager in the intelligence analysis section of the FIAU, and she's going to speak to you about suspicious transaction reporting. Thank you.
Hi, good morning. Thank you for joining us today. I'm Shantian. Basically, today I will be speaking about two examples of reporting that we've actually received at the FIAU, one highlighting a good quality report and another one having some bad quality reporting. Subsequently, we will be further delve deeper into what actions a subject person might take after filing a report with the FIAU. So, starting off with the first example, the first scenario. Basically, the FIAU got to know that a potential client, Mr. A, let's call him Mr. A, being a retail and commercial bank customer, he was known to the bank as being employed as an auto trader and also was involved in the construction industry. The second retail client, Mr. B, was also involved in construction, but told the bank that he was unemployed, he was recently unemployed. Mr. A and Mr. B both approached the particular Maltese bank to discuss the debt owned by Mr. B in relation to a mortgage he had on his property. During the meeting, Mr. A and Mr. B initially stated that they were siblings, brothers, and later admitted that they were old friends. It was noted that during the same meeting, Mr. A was asking a large number of questions in relation to potential legal actions that could be applied by the bank, and also showed interest concerning debit interest rates charged by the same bank. A few days later, Mr. A once again approached the bank in his capacity to try and apply for a mortgage in relation to purchase a property. Having said that, the bank did not did not issue the loan, basically, following a request for information which the bank had received on that same individual. Nevertheless, the story did not stop there. A year later, both Mr. A and Mr. B once again approached the bank, and Mr. A stated that he wanted to clear Mr. B's debt with the bank. Mr. A intended to purchase the property for the consideration of 110,000 euros, and to this effect produced a promise of sale agreement which was valid basically for a period of 10 years. Mr. A agreed to provide Mr. B with a total amount of 44,000 being paid effective on the promise of sale. Nevertheless, a point of concern which was raised by the bank was that the said promise of sale was not signed by the notary, and thus the payment was refused. Furthermore, the bank further highlighted that branch staff heard Mr. B state that he was somewhat linked to drug offenses, and in fact was also he had also spent time in prison. Mr. A once again returned to the bank to try and effect that to put forward basically the promise of sale. However, the promise of sale was again not signed, and thus the bank refused. So basically, this was the scenario the bank was faced with. In terms of what did the bank submit, Basically, the bank provided the FIAU with a summary of the bank's key findings of the investigation, together with a detailed narrative highlighting the thorough analysis undertaken by the bank. What do we mean by thorough analysis? Basically, we were provided with the relationship establishment date, the employment background, salary involved, identification documents, the accounts the individuals owned, both active and not, financial instruments they held, and other products owned. It is important to highlight that this was provided for both Mr. A and Mr. B. In addition to that, we were provided with added accounts overview, highlighting risky transactions and suspicious transactions, basically. In addition, the report also included clear suspicions and conclusions which the bank perceived. Basically, the bank noted the following concerns. The agreement was not notarized. A different font was used, which could easily indicate that the document, the POS provided, could have been forged. The POS was valid for 10 years, which is deemed to be highly unusual. And even the bank further went into further detail by highlighting that sentences C and E in the promise of sale agreement were actually incorrect. This clearly highlights the level of detail this particular bank has gone through. In addition to that, the bank further highlighted that there was historic adverse media on both the natural persons involved. Reference was also made to the intention of the bank to terminate the customer relationship. Basically, the FIAU was informed of the bank's intention, which is good. However, we did not know the exact date when the said relationship was going to be terminated. So it is suggested that the FIAU is kept in the loop and informed of the actual date of closure. Reference was also made to open source intelligence, and the necessary links to the open source intelligence was also provided in this case. In terms of added documentation, this particular bank provided us with adverse media articles, bank transactions for both Mr. A and Mr. B, opening account details, identification document, the promise of sale agreement, and eventually also the check images on the particular suspicious transactions. So this is a clear example of what we think as what a good quality report should eventually encapsulate. However, not each report should require the same level of documentation. However, it is pertinent to point out that the suspicion has to be clearly highlighted for the FIAU to understand what the bank is seeing as suspicious and to eventually for the analyst to take action upon. So moving on to scenario. Basically, we had another report whereby the bank was informed of another customer, Mr. A, who was a local PEP in the Maltese, local Maltese government. We were provided with an account overview whereby it was highlighted that for the period throughout January 15 and December 19, this particular person had substantial ATM and cash withdrawals exceeding the amount of 182,000. These cash withdrawals, the bank informed that these were not in line with his normal practices, since he usually used credit debit card transactions for daily purchases. During that same period, the customer issued checks in favor of notaries, billing authority, construction companies. These checks highlighted that the check withdrawals indicated that the customer was involved in purchasing a property or otherwise was constructing a particular property. The bank also highlighted that they queried with the customer as to why such cash withdrawals were being noticed. However, no information was forthcoming. Attempts to contact him by way of emails and telephone calls were unsuccessful. The bank provided the FIAU with the potential red flags, including the substantial amounts of cash withdrawals, which were not in line with the customer known profile. The customer seemed to be uncooperative, and the lack of documentation. Having said that, the bank also highlighted that all basically what I have told you indicated potential tax evasion. So moving on to what the bank actually submitted. The bank submitted a brief narrative report highlighting the background of the client and indicating the person's involvement in politics, basically, together with the account overview, highlighting unusual transactions being cash withdrawals. They further highlighted the potential red flags, which is considered as good. However, at this point, the suspicion was not that clear to the FIAU. Basically, by reading the narrative provided, the FIU could not make heads or tails how the said tax evasion came into play. Basically, we could not link what we were seeing on the transactions to tax evasion. In terms of documentation, the bank provided the FIU with the respective bank transactions, payment orders outwards, and payment orders inwards, together with the respective person's ID card documentation. As already highlighted in my summary overview, no explanation was given in relation to the ATM and cash withdrawals. And if the customer, he was queried basically. However, from further checks done by the FIU with the bank, it transpired that the tax evasion emanated from the fact that the bank client could have possibly been paying out the workers at his property without VAT. Having said that, the worker at the other end would be the person committing the tax evasion, and the bank's client would be just aiding him. It is important to highlight that the FIU needs to know firsthand what the bank is seeing as suspicious, thus to avoid the to and froing of queries, basically. I mean, the FIU needs to see the whole picture, the whole suspicion, so as not to deviate the FIU's analysis. Even the fact that in the report, it is perceived that no communication was made with the bank's client. However, when the FIU called, further considerations emerged. I mean, the FIU needs to know there and then upon submission what the bank knows, basically. So moving on to actions after reporting. Once a report is filed with the FIU goes through an acceptance and rejection criteria process, on GoAML basically. And once the report is accepted, the process of assessing a report is then initiated by the FIU's analysis section. Many a times we tend to receive questions where subject person asks, what is the next step for subject person to consider following submissions? If a subject person in turn decides to maintain the business relationship with the customer upon which a report was submitted, what is the subject person to do? And in terms of feedback, are subject persons provided with any feedback? Well, it's a yes answer, basically. In the course of a report, the FIU may require further information, as Clara further highlighted, in terms of the PML FTR. Well, basically, when the FIU requests further information, subject persons have to comply with the request as soon as is reasonably practicable, but not later than 5 working days. Having said that, extensions may at times be granted following justifiable representations. It is suggested that such extensions are kept to a minimum not to hinder the FIU's ongoing duties in carrying out analysis, basically. It should, however, also be noted that Regulation 15.8 also allows the FIAU to demand information to be submitted within a shorter period of time. If in turn, once a report is filed and the subject person decides to maintain the business relationship with that particular customer whom he submitted a report, the subject person should classify the customer as a high-risk customer and conduct ongoing due diligence, mainly remain vigilant and monitor the activities of that customer to a larger extent. It is to be noted that in such circumstances, subject persons should not automatically report to the FIU every transaction carried out by the customer. Subject persons should analyze the circumstances of the case, basically, and where necessary, consider passing on additional information. By way of example, for instance, if a particular customer subject to a report is receiving his salary in the same account where a suspicious transaction was noted, then in this case, there's no need to inform the FIU that he received his salary, basically, since the source would be known and that would not be suspicious. Nevertheless, if a transaction is noted which is similar to the suspicion reported, then yes, the FIU needs to be informed and the subject person has to provide an update to the FIU. Additionally, it is also imperative to also highlight that before taking any decision, subject persons who submitted a report to the FIU, basically, and who should take any decision related to a customer, either to end the relationship or otherwise they are faced with a pending transaction, the FIU needs to be kept in the loop. Discussions need to be held with the FIU, basically. In terms of feedback, subject persons filing a report with the FIU might request feedback from the FIU on the process of the analysis of the report, basically. However, the FIU, on its own initiative, might provide feedback to subject persons submitting the report. Basically, when giving the feedback, the FIU will provide the reporting subject with added information and considerations of interest to the subject person to enable them to regulate their affairs and to assist in carrying out their duties under the PMLA and the PML-FTR. However, subject persons must treat the feedback provided by the FIU with utmost confidentiality. Well, this brings me to an end of my presentation, and basically now we'll have a 15-minute break, and we will be back on around 10, a quarter to 10, please. Quarter to 11, sorry.
Good morning. Thank you for rejoining us for the panel discussion. Just a very brief intro on my part to set the scene. Also, I would like to remind you that the session is being recorded. The session is dedicated to discussing aspects of funding of terrorism, risk inherent to international financial centers. The 2019 MONEYVAL report was quite critical on this aspect, as the investigation and prosecution of inter alia financing of terrorism does not appear to be fully commensurate with the risks posed by this country's increasing nature as an international financial center. It said that there have been no prosecutions for financing of terrorism offences, and it is not possible to assess whether other FT initiatives are consistent with the country's FT risk profile, as no adequate profile has been established in the National Risk Assessment. This notwithstanding that the local authorities acknowledge the fact that, as an international financial centre, Malta is potentially exposed to financing of terrorism through a high amount of cross-border transactions, particularly complex transactions, and the international activities of charities and other non-profit organisations, be it through the movement of funds as a transit jurisdiction or through the management of foreign funds. The assessors also commented that since Malta, as an international financial centre, has some inherent financing of terrorism risks, one would have expected some analysis or more reliable data on the financial in- and outflows through the Maltese economy and other information available, such as SDRs on involved actors and available financial products, in order to address these risks by establishing some form of formal risk profile. In view of this and other shortcomings, they found it difficult to assess the adequacy of Malta's response to financing of terrorism. The report also concluded that understanding of financing of terrorism risk by banks, as well as related obligations, is generally good, except that banks did not demonstrate sufficient understanding of financing of terrorism risks inherent to international financial centres. Banks viewed financing of terrorism risk as low or medium, primarily based on their own risk assessments and not necessarily informed by any national view of risk. With this said, I now turn to our speakers, Cynthia Borch, who is the head of financial crime compliance at APS Bank, and Simon Vaughan Johnson, who is the CEO of HSBC Malta, and invite them to comment on their experiences in this area, focusing on lessons learned, particularly the importance of establishing a robust financial crime compliance culture and what this means in practice. I'd also ask our speakers to comment on the current situation and where there have been areas of improvement and where work remains to be done. Cynthia, would you like to start off, please? Thank you.
Thank you, Carol, and good morning to all present for this microphone.
Okay. Thank you, Carol, and good morning to all who are present for this webinar. I would like to start my intervention by tackling a number of factors which I believe it's important to keep in mind when we're discussing terrorist financing. One of them, and the main one I believe, is the difference between the journey of a global bank vis-à-vis financial funding of terrorism, the journey of a local bank, and the journey of individual subject persons, the rest of the subject persons, I would call them, because it surely is, from my experience, a different journey. And I will explain why. When you are dealing with a global bank, you have expertise, you have knowledge, you have individuals working within that bank who would have probably encountered the actual risk of funding of terrorism. You have resources, you have technology, and that is fundamental when it comes to establishing and having a robust framework. This cannot be said, or this isn't the same, surely, for the local banks or for any other subject person. And the reason being that although there is knowledge, because obviously one would love to learn and understand these risks, there isn't, let's say, I would call it, and maybe it's not the right term, but I would call it the luxury of having certain factors, let's call them so. And that is important to understand because we are all in the same playing field. We are all dealing with the same risks, and yet we don't possibly not always have the same tools, let's call it so. And that's very important to understand. The other aspect which I've encountered in my experience, not just within working within a local bank or international bank, but also in the industry, is there is a notion in Malta, possibly it's not that correct, but it's the feeling I get and it's the discussions and comments I receive. Historically, terror attacks have been uncommon, thank God, to Malta. And therefore, for many, the financing of terrorism is not close to home. So it's almost a stranger to us. And I do get the comments, is it possible this is not within? Definitely no, we will not have it. This is not what my bank will experience. This is beyond me. And that is something which I'm afraid is the wrong way of doing things and the wrong way of thinking, because it is difficult actually to really understand the risk when you do not have any knowledge of the vulnerabilities and threats of that risk. And closing your mind a priori from the risk, about the risk, it places you in a situation where you will not accept anything about that risk. The second issue which I face is the need of increased awareness. Therefore, we need to continue, and that is something which we will discuss later on, I believe, Carol. So I will not delve too much into that. And there are two other aspects which I feel that they are inherent risks for the local context. Malta's geographical position. We have a number of high-risk individuals coming from high-risk countries. We all know it. I'm not here to discuss that problem, but I will obviously mention that it creates risks for us, the banking industry. One of them is that these individuals and any other individuals have the right to have a basic payment account. These individuals come to us with minimal documentation. So it's very difficult to establish or confirm, verify the authenticity of their identification information provided. These individuals might receive legitimate funds because they work in Malta, they get a salary, although some of them do trade in cash. These individuals would want to use the banking facilities to send funds to their family. And that is another risk, which sometimes it's difficult to understand fully and be totally convinced that the funds are being routed, are legitimate, and the purpose is legitimate. And the final thing, and I won't take too much longer, sometimes, especially when you are a small local bank, the bank acts as intermediary, I would call it, as a conduit. So you'd have the funds flowing from the financial industry, from the bank, to and inward and outward. But you will not have the full visibility of the total transaction. So you would not know the actual source of the funds. You might be able to identify it from what the customer would tell you, and you might ask for information, documents which the customer will present. That's one thing. And then the ultimate destination of the funds. It's very, very difficult to confirm that because obviously you don't have the full picture. You're just seeing the middle part, and that is very risky because you cannot totally understand and see where the risk lies. And I think I did mention and start with these because these are important risks to identify and to us to know, to be able to really and truly create the right control environment, including a robust FCC, financial funding of terrorism framework.
Thank you, Cynthia. Thank you, Cynthia, for a very recent and practical assessment of the issues you are facing. Now over to you, Simon. What are your views on this? As a representative of one of the largest banks worldwide, what particular thoughts do you bring to this discussion? What lessons do you think may be applicable in the local context?
Thank you, Carol. Good morning, ladies and gentlemen, and my thanks to the MFSA for the invitation to today's seminar.
My name's Simon Vaughan-Johnson. I'm CEO of HSBC Malta. Prior to this posting, I headed up HSBC's Remediation Management Office in France for 5 years, where my team and I were tasked firstly with establishing and embedding a robust and sustainable financial crime compliance culture within that organisation, and secondly, driving the remediation of financial crime issues and actions that had arisen from internal inspections and regulatory inspections. Whilst I don't profess to be a financial crime expert in the area of financing terrorism, it is a very complex and specialist area of financial crime. I'd like to share some personal lessons learned from my time in France, which I hope you'll find useful and in the local context of Malta. Over the last 5 years, HSBC in the UK and HSBC in France and actually other major sites have gained a great deal of experience and significantly increased knowledge and capacity and capability in the area of TF. Sadly gained from the terrorist attacks in these two countries. Terrorist financing is an issue that's very, very close to us at HSBC because a member of HSBC's financial crime team in London, Ignacio Echeverria, was killed fighting off one of the terrorists with a skateboard in the London Bridge terrorist attacks in June 2017. He was awarded the UK's George Medal for bravery because his actions actually allowed other members of the public to escape from this attack. And we now have an annual award within the group for outstanding efforts to fight financial crime in his memory. At a personal level, the tragic terrorist attack in the Parisian area of Bataclan, which happened in November 2015, just after I'd arrived in Paris, really brought home to me the vital importance of the fight against financial crime and TF in particular. We were having supper at home and suddenly our phones started pinging and lots of anxious messages coming in from friends and family abroad. As a result of this personal experience, which actually catalysed the change we needed to see in France, to your point, Cynthia, about awareness within local markets and indeed complacency, I am now of the firm belief that we all have a duty to protect one another, to make the world a better and safer place. And we have a duty to protect one another, our customers and our colleagues. And this is the absolute nut and central issue around terrorist financing. Returning closer to home, to Malta, I'd now like to look at the Maltese context and the typologies associated with TF. As Cynthia said, our proximity to North Africa increases our risk levels, undoubtedly, especially given both legal and illegal migration and trade with North Africa. The movement of people from these neighbouring countries and jurisdictions into Malta as a transit point, but also actually getting stuck in Malta, does raise risk and raises concerns. And, as you said, we're obliged to offer basic banking services here in Malta, which can sometimes conflict with our own onboarding requirements. So we need to have controls in place to mitigate this risk. Quite normal for Maltese customers to trade and transact with North Africa, and naturally as a bank, we want to facilitate legitimate trade with the compliant economy, as we call it. But we have to make sure that we put controls in place to ensure that the bank is not used for illicit activity. And we have specific trade finance related investigative tools, for example, such as the Global Social Network Analysis, GSNA, which helps us to mitigate trade finance associated risk. We've actually conducted extensive analysis of TF, terrorist finance related topologies, across the group. And while a lot of TF activity is enabled by the use of they're called, or alternative value transfer systems, money exchanges, which bypass the formal system, there is also evidence of international terrorist groups now using the formal banking system on a global basis, and now through cryptocurrencies and payment service providers. The use of charities as a second typology and NGOs, knowingly or unknowingly, to transfer money to terrorist organisations is a well-documented risk. And it's actually very difficult to manage this because we want to establish legitimate charities and to assist those in need. But the reality is that the beneficiaries of these charities are often living in high-risk jurisdictions. Two other typologies just to mention are firstly crowdfunding, again, very well documented area of TF risk, And secondly, trading in counterfeit luxury goods, which presents a risk. Again, often unbeknown to the tourist who's buying the counterfeit branded goods and indeed the vendor. But very often those funds are used for terrorist financing. I'd now like just to focus on the cultural aspect of compliance. And the key lesson that I learnt in France was the importance of establishing a robust financial crime culture and embedding that across an organisation. It was my responsibility, as I explained at the outset, to establish such a culture in France. And it's absolutely essential in my experience that this is in place to drive transformation within the financial crime area. Of course, we all want to fight terrorism and TF, which allows terrorist groups to recruit, to train, to sustain and operationalise their plans. However, if you've got weak compliance culture, you'll have a weak overall control environment. So even if you know what the red flags are and the key risk indicators are and what you're looking for, you won't necessarily have the people, the processes or the technology to address the risk and to identify it in the first place. So culture is key. 3 things that I would highlight which are key elements of a successful culture. Firstly, consistent and proactive voice from the top. But actually, more than this, it needs to be a voice from within. So the CEO, his or her exco, everybody needs to be talking financial crime and the risks. Secondly, it's important that we insist on individual accountability and responsibility and ownership of issues. And this is something we put in France and we have here in Malta. So if there's a finding, one person owns it. We know who to go to and to support in closing that issue. And the third piece, which I think is incredibly important, is comprehensive training. And I would add that this training needs to be locally based. What we found in France is that people weren't really engaging with the training because it was all based on UK examples. And so we changed that and had a drastic improvement in understanding. So let's quickly have a look at some of the practicalities in mitigating the risk of TF. I'll have a very quick look at red flags, warning signs, and how we carry out our risk assessment and what our risk indicators are. One of the challenges, and Cynthia alluded to this with TF, is that it's really difficult to spot and it's hard to trace. Unlike money laundering, the financing of terrorism will typically involve small amounts derived from legal and illicit activity which flow in a linear direction, whereas money laundering tends to be circular. These funds are impossible for us to trace, and often, as they're dispersed, they're lost into the system. As I said, funds can be used to recruit, sustain, train and operationalise a terrorist organisation, and so can have many red flags, and each one of these can arrive at a different stage of the process. So I think if we characterise money laundering as easy to spot, hard to trace, I would characterise TF as hard to spot and hard to trace. And this means that for a bank, we're very dependent on the government and government entities to give us lead intelligence. What risk indicators do we use? Well, we use various complex factors we've identified from risk assessments. We also use risk indicators based on transactions and customer behaviour. Our controls include global watch lists, which are taken from government bodies such as the UN, keywords and transaction monitoring, the monitoring of transactions with high-risk jurisdictions or high-risk nationals, and we also have a number of filters and watch systems that sit on the payment systems to detect suspicious or anonymous activity. We also have extensive training programs for staff, whether customer-facing, advisory or investigative, to detect the illicit activity, which includes TF. A repeated red flag that we observed in France, which I would like to share with you, is the reactivation of dormant accounts. Watch those because typically they are used for TF activity. And in addition, have a careful look at unexplained purchase of air tickets, either by volume or by value. Again, these can also be an indicator of potential TF activity. There are many others, of course. Finally, I mentioned that banks rely on government entities to give us intelligence. HSBC has absolutely taken a lead in countering terrorist financing, both internally through our governance and controls and externally in reaching out in key markets to government and private sector to ensure that there's the very best collaboration. This discussion today is invaluable since we have to place countering the finance of terrorism squarely in the context of public-private partnerships and the relationship between governments and the private sector. At its simplest, governments hold certain intelligence, including from classified sectors, which needs protecting, while banks hold financial and customer data that's useful to government. They need filtering and interpreting. There are also issues in the difference between government enforcement and banks remediation. For example, if we spot TF, we will report it, and usually we'll exit the customer, which may in fact be counterproductive for government enforcement. And this is something that needs to be led into greater debate. So while respecting the issues around source protection and data privacy, we have to build the structures and processes and the trust to allow us to exchange data between us and government bodies. Our Financial Crime Threat Mitigation Team, FCTM, who conduct investigation and analytics in country, in our regional and our global sites, have extensive law enforcement, treasury, regulatory, security, and intelligence service backgrounds. And this has been enormously beneficial to us in our fight against TF. They're not bankers, but they understand criminal and terrorist networks, methodologies and topologies, and legal issues on data sharing, and they're wired in a different way to us bankers. Bring specific expertise and knowledge on terrorist financing, but also know how government agencies operate and retain links with government agencies to build and maintain trusted relationships between us both. So we have a number of joint liaison and PPP initiatives that we have in 3 sites. We have what's called the JIMLIT, the Joint Money Laundering Intelligence Task Force in the UK. We have a consortium in the US and the Comité de lutte contre le financement du terrorisme in France, the CLTF. And we're working with 3 sites closely with government on the PPP journey with different processes and methods that are increasingly effective in sharing knowledge in those jurisdictions. In summary, 2 key messages. Firstly, it's really, really important to ensure that you have a robust FCC culture in place so that the minute you turn your back, the clearing in the forest doesn't grow back. And secondly, in my view, the very best way of fighting this challenge, this battle, is through constant education and through continued and active collaboration between the financial sector and the government. Thanks.
Thank you, Simon, for that very insightful exposition and also your personal experience, which is moving in a certain way when you mentioned your one of the colleagues from HSBC who actually was a victim to terrorism. Now I'd like to pose another question to Cynthia. And this time I'll focus on the excellent FIAU guidance note on the funding of terrorism, which combines insights and select findings from the 2019 Financing of Terrorism Risk Assessment and builds on the previous 2018 guidance note by providing more substantive information on emerging trends and typology-specific case studies and red flags. In fact, in the fairly brief note, it actually comprises also 14 case studies, 3 of them being local. That to me is very evident that there is substantial creativity demonstrated by terrorist organizations in developing methods to move funds via, amongst others, banks. And this creativity is obviously, because of its extremely diverse nature, is very challenging for subject persons to counter. My question is this: how should local banks equip themselves to tackle the arduous and demanding tasks of countering of financing terrorism, particularly since to date it appears that for most the area of financing of terrorism is arguably relatively new when compared to prevention of money laundering. You mentioned this point earlier on, Cynthia. It's as if here locally, this is something which happens to others and not to us. So what's your take on the meeting? Thank you.
Yes, Carol, I mean, I would start by saying we go to HSBC and ask them to help us with mitigating the risk. But no, we need to do our part as well. And I would like to start by commenting about something which I already mentioned at the beginning, the need and importance of awareness, of training. The opportunity in my career to deliver training to a number of subject persons, not just within the banking industry, across the board. And one thing which I've noticed is that when you go with a presentation mentioning and discussing the rules and regulations and stopping there, I would see that it was futile. The message wouldn't come across. But when we go and we discuss real case scenarios, bringing to life the risk, that is where there is the understanding, and that is where a risk which was a foreigner becomes something which is relevant to each and every institution or subject persons. And I think that this is crucial. And yes, I did welcome the guidance note issued by the FIAU. I particularly welcomed the case scenarios because actually we use them when we're training. When we give training, I use those case scenarios so that I ensure that the message on terrorist financing is reaching. If we don't use case scenarios, we will not manage, we will not meet, because the risk is too high, it's too difficult to understand, and it's too much of a foreigner. Sometimes money laundering is different. It's more homely. So I think that as banks, we need to first and foremost group up, as we've often done and as we're doing. Group up to understand, to discuss, to learn. HSBC and other international banks have a wealth, as I mentioned before, of knowledge. I formed part of that of the group as well some time ago, and I can vouch for that. So, and that is something which local banks can lean on or make use of, and it's important. So that is something which is much needed. Cooperation with the local authorities. We need to hear more about what's happening out there, what the risks are, how to manage them. Something else which Simon mentioned and I took note of, the technology. I mean, we know that there is a technology. We need guidance, and it's very important that local regulators help us, local banks, also maybe to understand the type of technology we need to mitigate and fight the risk. That is something which is needed. There is a whole list of things, but I'm conscious of time. But these are two aspects which I think that as local banks, we need to come together. Training, awareness, coming together, understanding, helping each other, understand the risk, technology, understanding what type of technology is needed, to mention, etc. And finally, I would say that as banks, we need to start being preventive and having preventive measures more than reactive. So what I say is, we mentioned that we have a high number of high-risk customers coming from high-risk jurisdictions. Preventive measures would say that rather than, okay, we have to onboard them, but at least we'll have some thresholds in place, which would mitigate the risk of funds going out of the country, reaching destinations which might be high risk of terrorist finance. So adopting certain preventive measures across the board, not just to one bank working in a silo. We are one financial, I would say, financial industry. And if we work in silos, we won't manage. We need to group up and come up with solutions together, learning from each other.
Thank you, Cynthia. That is very useful for the situation, the scenario locally from a perspective of banks which rightly or wrongly do not have the benefit of resources which are on a group-wide basis. Simon, I'll come to the last question. And I sense that you've already touched on what I'm going to ask you within your previous intervention. I'd like to ask you, if you had to draw up a wish list incorporating principles you would like to see competent authorities adopt to assist you in countering of financing of terrorism in Malta as an international financial center, what would be your top 3 priorities on that list? Thank you.
Thank you, Carl. To begin with, as I've sort of said earlier, I'd seek greater public-private partnership for information sharing and cooperation. I think in Malta, like most jurisdictions, we're still having the debate on why rather than how, and we need to accelerate this process. Information sharing is key, and it's more than just regulatory reporting regime and STRs. It has to be a two-way flow of information. And actually, I agree with Cynthia. I greatly welcome the report from the FIAU. It's highly commendable and a great sort of step forward on this journey. The second thing I would wish for is enabling and encouraging private-to-private sharing. What do I mean by that? While there's an ability for MLROs to share inquiries, and admittedly we need to make more of this, we'd also encourage the competent authorities to lead the way with clear laws and guidelines to ensure what we call safe harbour and greater advocacy within the financial community. And my third wish would be to develop an even playing field. Banks are well understood by the competent authorities. We've worked together for so long now. But the threat from TF actually is likely to be more from the emerging financial services sector, which don't typically have the same robust controls developed over many years. So there needs to be consistent supervision and regulation across all financial service providers, across the whole jurisdiction, including those newer financial service providers, from challenger banks to personal payment service providers and crypto exchanges. At the end of the day, we've all got to collectively take an active risk-based approach and responsibility in countering terrorist financing, because the system is only as strong as its weakest link.
Thank you, Simon. So thank you, Cynthia. Thank you, Simon, again, for your interventions. I think they, within the time we have had, you have touched on the major areas relating to this very complex and ever-changing, continually evolving subject. And with this, I pass on the mic to David Ecott, who will be now going over the questions we have received from you, the audience. David, over to you.
Thank you very much, Carol, for chairing such an interesting session there. We have indeed received a few questions, so I'm going to group them to make it easy. There's a couple for Emily from the MFSA, and then I'm going to ask a couple to Shantian from the FIAU. So Emily, the questions that have been raised, and they are some interesting ones for you, so this will be useful. The first is whether it's clear whether institutions have to improve their, or it is clear that institutions have to improve their compliance culture, but are the expectations for financial institutions the same as banks, or does the notion of proportionality come into play? And I guess Simon alluded to that in the previous discussion. And then the a subset of that is whether the MFSA has views on the outsourcing of the compliance function, in particular when that person providing that service provides it for different subject persons. And then your second question is, it is difficult to decide whether to report a self-identified issue to the MFSA. So can the authority provide firms with criteria on which to assess whether an issue is significant and needs to be reported. And also, firms might be reluctant to report self-identified issues out of fear of being penalised rather than congratulated for a good compliance culture and robust risk management. So could you comment on that? Thank you, Emily.
Thank you, David. Nothing like getting 4 interesting questions thrown at you all in one go. So first of all, on the question of systems and controls and proportionality. The short answer is no, we don't expect all the firms in Malta to have the same highly complex, sophisticated, well-resourced, technologically enabled and highly effective systems and controls of the big banks. However, we also think that this isn't a pass, a get out of jail free card either. Where you're a smaller firm or a medium-sized firm, what we do expect of you is that you think about the risks that you present to the financial market in Malta, stability, soundness, reputation to the financial market, the risks you present to your customers, the risks that you present to our fight against financial crime. When you're deciding what systems and controls you need, when you're sense checking them, when you're asking yourself the question, has my business changed a lot? You have your business risk assessment. We expect you to look at it. We don't want to see something that's clearly out of date. It's a common trap I see where a firm has outgrown its systems and controls. And it's for the firm to recognise this before a great big gaping hole opens up in the road that they then fall down. So think about whether your controls are proportionate to the sort of business risks you face. We also think that there are some fundamental principles for those systems and controls. So we need to see board challenge. We need to see evidence of your decision making, and ultimately we don't expect you to check your own homework. That's a simple phrase, but what we do expect is that where you have a compliance function, every now and again you put in an independent check on it so that you can be comfortable as the senior management that your compliance are doing their job well and identifying the risks that they face. So we don't expect everyone to have internal audit. We do expect to see you regularly holding a mirror up to yourself and giving yourself a check to see that things are functioning properly, and usually, to be on the safe side, some independent scrutiny will help. So that's where we are on proportionality. Leading on to the connected question of when do you have enough compliance, and is it okay for your compliance function to take several roles? This is something we see quite a lot in Malta, and as we said, we think that sometimes the demands on compliance, the time commitment and the skill commitment and the resource commitment required of compliance is underestimated by firms, and that the compliance officer is putting in too little time to be effective. That said, we do accept that not all firms will need or have to have a full-time compliance function. Where they think they don't need the full-time compliance function, again, we think they need to have done their own assessment of what compliance is for, have their own assessment of the risks that compliance is there to mitigate, and form their own judgment about whether that compliance function is enough. And we also ask the compliance function think about conflicts of interest very, very carefully. We are not happy with compliance that is not independent, and we can see several functions compromising that independence. So it is possible to outsource it, but you may need to have be able to answer our questions around the adequacy and whether there's too much of a conflict of interest in the person who's offering you the compliance function service. So turning to the question of significance, and I'm not surprised by this question. I thought that everyone's immediately going to say what's significant. At the moment, we haven't got prescribed criteria about significant that I'm aware of. But if this becomes a real area of interest in the financial services sector, we're certainly, as we said, amenable to having discussions with you and providing further guidance. Some simple things to think about when you're looking at a breach. Does the breach tell you that this is part of a wider picture? Does the breach tell you that this is a systemic problem? It may be that you want to take the breach and find out why that happened and why what happened that led to the breach, why did that happen? And try to trace it through to the root cause when you're thinking about whether it's significant. And then what are the implications for the rest of the business? So, for example, you might have confront a complaint that you think is particularly uncomfortable, that is not going to look good on the front of the Times of Malta. That complaint, how is that being handled? And are there more complaints like that? And is your complaint function doing root cause analysis? And if your complaint function isn't doing root cause analysis, why is that? Is your complaint, the head of complaints, actually more worried about getting the throughput through quickly? And if they are, then did compliance pick this up? And if compliance, so on and so on. So is it systemic? Is it actually of a scale that means that a lot of people are affected by this? So if your ATMs go down, you know, we have seen banks suffer some pretty severe penalties for the fact that they hadn't actually got a BCP for when their servers go down. Financial crime, obviously, we're very interested. Again, is this typology, as Rick was saying, is it a red flag for something that you haven't really been picking up and you should maybe look for more large-scale buying of airline tickets? The impact on your customers, if this happened to your customer, is this their life savings? I remember particularly a case in the UK where a well-known insurer, the customers were having their life savings stolen. But it was fraudsters. It wasn't the insurance company's fault. You know, go and talk to the police if you've had everything stolen. But then some of the senior management had their pensions stolen as well. And guess what happened then? Then there was a big investigation. So we want you to think about the consequences and the impact on the customer. And the type of customers. Is this going to affect someone who's particularly vulnerable, particularly unable to deal with this problem? And the impact on you, is going to destabilize you. So that's you as a bank, you as an insurer, is this going to jeopardize your financial stability if it turns out to be a bigger problem than you thought? We want to hear from you. We want visibility of issues early so that we can support you and work with you and help you understand the ramifications and how you can fix it and mitigate the risks. In terms of self-reporting, yes, if you're self-reporting a breach, I'm afraid that is a breach. And the fact you self-reported it isn't going to actually stop it being a breach. So you may face enforcement action or remediation because it's a breach, and I can't get away from that. However, if you have a significant problem and you're sitting on it, that's a different breach for us. That's another order of magnitude because it shows the wrong compliance culture. It shows senior management not taking their responsibilities seriously, not understanding what their regulator expects from them. So if you don't report it, it will be worse for you. But I can't promise you that you will get out of jail if you report early. What I can promise you is that we will take account of that in what we decide to do, the action we decide to take, we will take account of it, and it will be relevant to us. So I hope that's dealt with my 4 questions. Thank you very much, and thank you for the opportunity to talk to you today.
Thank you, Emily. And thank you for answering those questions. Shantion, there's a couple of questions for you in relation to STRs. So the first relates to the MONEYVAL recommendations and whether subsequent de-risking exercises undertaken by banks, did the FIAU see a spike in the number of STRs that were submitted? And then in relation to the STRs that are submitted, will you be providing feedback on their quality in the format that you normally do, a sort of 1 to 5 rating? Shantian, over to you.
Thank you. So starting off with the first question about the increase we have noticed in relation, if we have noticed in relation to the risking in submitting STRs, basically the increase in STRs. So in actual fact, we have received up until October, the 1st of October, we have received more than 3,000 STR, which exceeded the total amount of reports received in the previous year, basically in 2019. This not have, however, we have also noted a spike in report being submitted in the month of September, basically, whereby we usually tended to receive around 300 STRs each month. But in the month of September, we've reached a total of 660, which is quite a substantial increase. We've noticed that the STRs being received are predominantly being received in numerous based on suspicions. But what we would actually want to see better quality reports. We have seen an increase in numbers, yes, but this has to be backed up with an element of quality. We tend to see that in the case of de-risking banks, they tend to submit a high number, a voluminous amount of reports. Nevertheless, they seemingly seem to be more interested in increasing their numbers rather than submitting effective analytical detailed reports, basically, in terms of quality. Moving on, nevertheless, we keep on encouraging submissions, reporting submissions. However, we have even noticed a greater degree of cooperation amongst subject persons and the FIAU and the other regulatory bodies. This is rather promising, and we keep on encouraging the spirits, basically. Even in the case of when subject persons tend to have queries in relation to a particular suspicion or they have a question to ask, basically. We encourage them to reach out, and we keep on that communicating process and barrier to even facilitate the work for both the FIAU and the subject person on the other end. Moving on to the second question, which was raised in terms of feedback. Well, basically, I wanted to make it clear that there's a difference between the feedback on the quality and the feedback which I highlighted early on in my presentation. Basically, the feedback which was highlighted in my presentation relates to the feedback on the outcome, what has come out of the actual analysis being undertaken by the FIAU. With the introduction of GoAML, there has been some changes. Basically, the feedback on the quality, the 1:5, basically, is no longer being provided. This does not mean that there is not an element of scrutiny done by the FIAU in this regard in terms of quality. However, the process that we're undertaking is that once a report is submitted to the FIAU, there's an element of acceptance and rejection process, basically, whereby once received, the FIAU scrutinizes the quality of the report being submitted, sees whether the necessary documentation has been attached and whether the suspicion has been substantiated. If in the case a report is not of a good quality, basically, it is rejected. So this further instigates that the quality, the subject person should understand that if a report is rejected, there was something missing. When we reject, it's important to highlight that when we reject, we highlight the points that are missing. So in my opinion, such a method is better than the number rating we used to receive, we used to give in previous processes, basically. However, in terms of feedback on the outcome, the same process has been and is still being carried out. Basically, we provide you with a checkbox, and it is clear. It is an indicator of what the FIAU has done with the reports provided. Basically, I hope I have answered your questions, and thank you for everything.
Shantian, thank you very much for that answer. We've actually got a last-minute question in, which I'm going to pass on to Cynthia, who has joined us back at the table. So the questioner identified themselves as Stefan. So Stefan's question, Cynthia, is: are banks and financial institutions the most relevant subject person in addressing small-ticket terrorist financing, or should we think outside the box in such a context?
A very relevant and very good question, Stefan. Let me start by putting out a statement. Okay, thinking outside the box, in my opinion, is always beneficial in everything, especially when you are trying to understand the risk, looking into vulnerabilities and threats. So thinking outside the box is, yes, definitely, whatever the context. I really believe that it is important. But something else which is very interesting to your first sentence, the comment. Terrorists, yes, require revenue funds to finance their operations, okay? And our first thought is that automatically they will use the financial services, banks, etc., to route or route these funds. What's interesting is that an FATF statement, it was a threat assessment a while ago, yes, in 2010, this was revised, but something which came out of that and which really struck home was that, as such, from this assessment, it was noted that terrorist financing funds are often kept out of the financial system, and they will only hit it as a final destination or at the beginning, etc. And the very reason is because they want these funds to go undetected. And so, yes, that's why I also commented during my presentation the need that there is awareness across all subject persons, not just the financial institutions or banking only, because I firmly believe, and I saw it also from experience, that money launderers, but also terrorist the funding of terrorism, make use of other players in the game to route funds, to turn or to change the face and the format of the funds so as to always prevent detection. So thinking outside the box, one of them is for sure including subject persons, other subject persons in the discussions to ensure that the same understanding which we as banks have is shared and is made aware to the rest of the players, to ensure that obviously all holes and all risks are mitigated across the board, not just through the financial industry. Thank you.
Okay, thank you, Cynthia, for that answer. I think the question was a very good one to end on, because it does illustrate that we are all in this, as it were, together, the regulators, the banks, financial institutions, but all the other firms, and everyone needs to play their part. So thank you for the question, and thank you for that answer. So I'm going to now just hand over to Emily Benson to make a couple of closing remarks before we end this webinar. But thank you to those people who sent in questions to help us draw out a few more points before we end. Emily, over to you.
Thank you, David. And I just first of all want to thank everyone who's participated in this webinar. I've certainly found it extremely interesting. I'm really encouraged to see the way that people are enthusiastic to contribute to these events, and I hope that you found it as helpful as I have. Really, just to sum up on a few thoughts on what I've heard today. We are, as I said, we really think that the way forward for Malta includes that we raise the bar in compliance, and that firms do begin to see compliance as an investment in a more sustainable, more valuable, better quality future. And I really genuinely believe that. And I really believe that we can work with the industry to achieve that. The cost of compliance may increase, but we think that in the long term it will pay dividends in terms of the business opportunities that Malta will achieve. They grow by the day, and I really believe that we are going to be successful in overcoming the challenges that we face in the next few months, and which we at the MFSA are working, I can assure you, day, night and weekend to overcome. I was extremely interested in what Rick had to say about terrorist financing. I think it always seems to be the poor cousin of money laundering. And one of the reasons for this is that there isn't the big money. The big money attracts attention, and this is small money. And I am told by the head of the FCC that the terrorist bombings in London cost £300. So terrorist financing is about spotting the small, odd stuff. And we do have to rely on you in the financial sector as our eyes and ears. Please bring stuff to us, or we can't work together, and we can't work together with the industry and across authorities to track down these people before they cause the terrible unhappiness and suffering that Rick mentioned. So on that note, it remains just to say I've been so grateful that the MFSA has been given this opportunity. It's the MBA that made it happen. It's the FIAU that have worked with us, and we're really grateful to our external contributors. So thank you all very much.